What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. Power line today is kind of close. What's up again? It's Dan Fredenberg.
I'm joined today with Hammad Khan. How you doing today, Hammad?
I'm doing great. How are you?
I can't complain, right? Another day, another $1.50, dollar something,
Exactly.
something like
Oh,
that.
30.
But what can you do? Anyway, so for those of you in the audience who haven't seen a Chance Encounter before, the deal with this is I interview commercial real estate investors. I find out which of the 5 motivations that I found matches their own motivation for their next commercial deal. Then I go through the 6 different roles in commercial real estate and I say, which one of these is your core competency? But one thing I think is very important is being able to introduce yourself effectively. I think it's key to success. So that's why I usually put my guest on the spot and say, Hammad, could you please introduce yourself for the audience?
Yeah, absolutely. So basically, what I do is I work with busy professionals and high net worth individuals to help them find, good investment deals, high return, lower risk adjusted um, deals that they can invest in. And I partner with experienced operators to make sure I find them not just the best deals, but the best people operating them in the best locations.
Excellent, excellent. So that brings me to the first segment. So, one issue that we run into with beginners is that they know their motivation, but they don't know what the role is going to be in a co-GP situation. Sometimes they end up wanting to break the law, but the motivation part, that you can't break the law with your motivation. So the 5 that I found, the number 1 is to preserve your purchasing power. So that's more for the family offices, basically the ones who they rely on their wealth to generate all of their income. So they're not just getting a salary or something like that. And what they're really concerned about is inflation, because inflation is what's going to make it so that the party stops. They can't pay their bills. They might have to cut their hair and get a real job. But that's just a song quote. But that's the first motivation. The second one is my one, which is as a high earner from tech, I realize that I can go ahead and take some savings from what I've done and dump it into these properties. But if you're co-GPing, then your time is getting rewarded in the form of wealth, which I think makes way more sense from a tax perspective. So that's what I'm up to. The next one's the most common one, which is fast tracking retirement. And there are a couple things that are implied in that. One is that there's an end in mind. Okay, so there's a point where it's like, okay, once like enough is enough, and it's not necessarily going to be like working into your 90s and still hustling and all that sort of stuff. But the other thing is there should be some capital to work with for fast tracking your retirement to really apply. But that's in stark contrast to those super duper ambitious people who want to buy their entire hometown, and that's why they want commercial properties. They want a massive portfolio, and maybe it's because they want to have the biggest yacht in the pier. But the main thing is these guys will keep on hustling regardless how old they are. And that's in contrast to the last one, which is that some people have some sector of society, or maybe like I've heard some people who want to help out animals, but they realize that accumulating wealth has got to be the best vehicle to make an impact on society. They don't like my friend Tim Bratz. He has the one liner of like, how many hospitals do you see being built where the name over the door is of a librarian? Like, sure, you're making a great impact, but that wealth piece is it's an amplifier for that level of impact. So societal impact would be the 5th motivation. So out of those, Hammad, what What combination of those motivations best describes you or resonates with you the most?
So I'm gonna be me, and I'll give you a simple answer. How about that?
Sure.
I initially getting into real estate, had to do with retirement, not necessarily early retirement. A little bit of backstory. When I first started out, I was in automotive. I spent the last 13 years, Fortune 100 consumer goods, for companies that own brands like M&Ms and Snickers, Oreos, Cadbury, etc., and tons of other stuff. But I was in automotive in '08. And a lot of people around me, they were pretty close to retirement age, I would say within 5 years. And they had lost everything. Literally, I can't even describe the look on their face. Like it's very vivid in my mind. So that drove me to real estate because I made a decision at that point. Whatever I had in my 401ks or anything like that, or anything retirement saving wise, was just a bonus.
Mhm.
I wanted a way when I retired, I had a dependable income, because with everything going on today, inflation, governments and pension plans and all this other stuff, it's not guaranteed.
Mhm.
So that got me into real estate. I did it on the side. I was doing single family conversions to legal duplexes. And more recently this year, I have decided to leave the corporate world altogether.
Mhm.
A lot of people say retire, but I can't call it retire because I'm still working. And the key driver there was time. I wasn't spending any time with family. I was spending all the time at work, driving to work. You're Canadian, so I was going from Waterloo to Toronto, almost hour and a half, 2 hours one way. I was spending 3 to 4 hours a day in the car, plus 10 hours or so at work. It didn't leave me any time at all. And I'm not getting into the corporate world thing, but you're literally crawling and begging for any kind of incremental increases, no matter how well you work, even though the company's pulling in like double digit growth numbers, right? So there's a bunch of things that just didn't sit well with me, how the corporate world works, lots of disconnect. You talk about work-life balance and everything, but it's more just rhetoric, the PR. So I just, that made me just want to leave the corporate side of things and just do something on my own. And I knew real estate well. I did well with it. I would say made more in real estate in the last 10 years than I did through my working full time. So
Mhm. That's a fantastic answer. And I really do think that you've tapped on to a sixth distinct category of motivation, which is that it shows me that you just have no faith in traditional assets. Like stocks, really, that it can all be gone, or like Social Security or social insurance in Canada, right?
yeah, stocks are a little bit different. I mean, I when I talk to my investors, I don't say don't invest in stock. I actually say invest 20% into real estate. I'm invested, I would say, more like 60% myself, just because I believe in real estate more.
Mhm.
But by no means does it mean take yourself out of stocks or bonds or anything. It's the key is diversifying yourself.
Yeah, I love the scarcity of real estate. Everybody says location, 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 and what they're really saying is two things. One is that it depends on traffic, and then the other thing is there's the scarcity, which is
Right.
that there can only be one piece of dirt in one particular
Exactly.
spot. So,
That's that's exactly it. You can only build up, and either ways, the properties will go up as the population grows. That's why it's important to look at markets that have good job diversity. And I really want to focus on that job diversity bit, and I'll circle up on that again.
mhm.
But job growth, population growth, those are critical to kind of predict future growth.
Yeah, exactly. It's a form of a hedge, right? It's like because that's what you really have to do as a repositioner. You have to have it where it's like you're not like the fail point's not just one thing. It's like like at least five things need to
Exactly.
fail miserably before you start to get any negative
Yeah,
exposure.
and the one thing I do like about real estate is, real estate has its ups and downs as well. By no means is it risk free, but if you're purchasing right, your debt coverage ratio is good. Even if the property value goes down, you just hold on to it for a little bit longer than you're expecting to, write it out. As long as it's cash flowing, you're still good, right? You're going to get your investment back at some point. So.
Right, I love that. But let's get to the next segment here, which is the different roles. And I know that some of what you're saying will make a lot more sense to those in the audience who maybe have a little bit less experience. But I'll start off by explaining what a repositioner is. You can see I got a couple different properties in there and some paperwork. So repositioner's job, part of it is definitely underwriting. In other words, figuring out, doing the math, figuring out if it makes any sense. And they need to find the upside out of a bunch of different properties and find out this is the one we're going to do. And the two different ways that people generally get upside, one is through more efficient operations, which means cutting expenses, and that makes an enormous difference as far as the value of the actual property. I've got the money going down the toilet to make sure that people understand that handling the money, whether it's bookkeeping or the marketing to make sure that the vacancy rate is low, those are all parts of the operation team, the day-to-day stuff. But because right now it's the hottest real estate market in history, operations is probably not going to be enough. So the most common second way that a repositioner can find upside is by getting a contractor team. So they make the units nicer so that way they can charge more in rent. It's also important to make sure that you don't get the person who's, the handyman who unclogs toilets to try and build, big elaborate capital expenditures, like patios or whatnot, because nothing will be square and it'll be really bad. So those are the two ways to get the upside. But the other piece of the puzzle in more of a day-to-day sense, especially if you're remote like me, is you got to have a local. You got to have boots on the ground, somebody who can be there in an hour, and that's not going to be me. So you get these guys, and then you basically are able to take over and run it, but you're going to have to go to a financier, in other words, a bank, or maybe a bunch of capital raisers, like who knows what it is. But you go to the financiers and you say, hey, I need all this money to buy this very, very expensive asset. And then they'll look at the property and do everything that you already did, but they'll also ask, okay, but who's your sponsor? Who's your KP? And a sponsor, this is the one that's a little bit scary for beginners. The sponsor has to be somebody who already owns a similar asset, at least if they want a loan. And that is pretty much everybody. But basically, if you want to have a 300-unit apartment complex, somebody in the fold has to have a 300-unit apartment complex. And then somewhere in the mix, you need to find a balance sheet of at least the value of the loan. So those are the 6 different roles in a commercial deal. Which of those is your core competency or what you're most likely to contribute in a co-GP situation, Hammad?
Yeah, absolutely. So I'm going to give you another complex answer for this one as well. So I would say I cover a lot of those boxes because, I have my corporate experience. I was managing a $600 million portfolio on the operations side of things, and we're selling $1 candy bars. So you can only imagine the volume that I was dealing with there, and 5 different categories dealing with, candy, gum, cough, seasonal, chocolate. So operations side, I've been expanding a lot of my efforts on the marketing and financier side of things because I believe I can bring a lot of value on that side. I spend a lot of time at work, corporate side of things and strategy sessions. So I was doing what was called an integrated business planning manager, which looks at strategies for sales, marketing, supply chain, finance. So that's where, bring a lot of different expertise there. And then on the real estate side, like I mentioned, I started with doing single family conversions to legal duplexes. So I actually did all the work myself, especially the first couple. So I have a lot of construction experience as well, dealing with the city, permits, etc. But I would say primarily on the financier side, and then helping out on the operations and some other aspects as well, wherever needed, basically.
Excellent. So as far as like a buy box or ideal property, do you have any geographic areas or unit counts that you're comfortable sharing?
Yeah, with my business model, I look for experienced operators, build relationship with them. So I'm kind of open to location. What I look for is, I would say, the very least 1980s and newer. I prefer 2000s and newer, they're better, and 100 unit plus. And I would say, you know, location wise, anywhere where there is, I touched on, you know, the demographics, population growth, job diversity. I want to touch on job diversity a little bit more. And I'll give Detroit as an example because I'm based out of Detroit, even though I do not invest in Detroit or Michigan. Because when you look at Detroit, it looks like it's, you know, the diversification is there, but it's really not, because even all the other industries that are here are in one way or another supporting automotive. So if automotive takes a hit, it really hurts the economy here. You know, population growth hasn't been the greatest here. It's been mostly declining, more so flat now. And so there's a lot of reasons why I wouldn't want to invest here personally. So I look for, you know, markets like Texas, Carolinas, you know, a couple markets in Florida and Georgia, Atlanta market, for example. You know, there are a lot of markets out there that are doing really well and have a lot of growth, and they're business friendly as well.
Excellent, excellent. And you and I met through some meetups that I found through LinkedIn. I see that you got your website up on there. What's the best way to reach you? Is it through the website or through LinkedIn?
So, yeah, I would say go to my website, handsoffinvestment.com. I have all my social media links on there. If you go to my bio, you can read a little bit more about me, and then my LinkedIn link is there too. Follow me on there. I have a lot of things that I'm working on right now for the new year. You know, one of my goals is to help busy professionals. My wife is a doctor, so you know, I have a lot of relationships with doctors and also corporate execs that I'm working on, because I don't want someone else. You know, one of the other challenges I had was I couldn't invest in stuff because I was so busy working that I didn't have time to really dig deep into, you know, other forms of investments. So that's where I want to play that part for my investors, is I can be the expert. They can depend on, find the experienced operators, because, you know, not all operators have great deals every single time. Right. So it's more a matter of sifting through and finding the right deals for them and presenting that to them.
Right. Excellent. Excellent. And for those of you in the audience who don't know me and they only know Hammad, my background is in e-commerce technology and mass marketing, which means it's lead capture, lead generation, automation, and online sales funnels, whether it's for a digital product, online event, a physical product, all that kind of stuff. So what I'm bringing to the CoGP team are those digital automation and scaling skills. And that's what I'm up to. The other part is the content creation, doing this stuff on social media, which feels like a complete waste of time for most people. But speaking of social media, I have one big favor to ask you in the camera and the audience behind that little piece of glass there, which is under my left hand. You'll see a red button that says subscribe, and it makes me really, really sad when it's red, and it makes me really, really happy when it's gray, because that means YouTube will pay for these videos instead of me, which is so much better. I love that Google money. So please do subscribe. All it means, that doesn't cost you anything. All it means is that my videos might show up in your list of suggestions. But Hammad, this has been fantastic getting to know you better. Thank you so much for joining.
If you don't mind, can I add one more thing?
Of course you
So
can.
if you go to my website and if you want to learn more about how to invest hands-off, I have a mini series there you can download, and it'll take you through. I have 6 ebooks. It'll send you, you know, an ebook every couple of days, and you can learn how to invest hands-off in commercial real estate.
Excellent. Excellent. Thanks again. You have a great day.
You too.
All right.